Hi everyone and welcome to my monthly vlog. I hope you're all well and enjoying the longer days. Today as I record this is the equinox where we have the same amount of daylight hours to night time and a signal we're entering spring. Thank goodness this winter has seemed long and hard. So what's been going on this month? Well, we've had another budget, of course. On the 15th of March, Jeremy Hunt delivered his budget. We've sent all emails, a client update about this, but I'm going to give a very quick summary today here as well. As expected, there were no further changes to tax rates, bans and allowances. These will all be as were announced in the autumn statement last November. You can read the previous updates on our blog. However, there were some major announcements in regards to pensions, which will affect a number of you, especially those currently still accumulating pension savings and those impacted by the lifetime allowance. The lifetime allowance, which is the amount of pension savings you can accumulate and use in your lifetime, will be abolished. This means you can build up as much in a pension as you wish without any tax penalty. The lifetime allowance will be abolished from April 2024, but withdrawals in excess of this lifetime allowance next year will not suffer a charge. Effectively, the lifetime allowance rate will be set at 0%. This is to allow for the unravelling of the existing legislation with changes to be included in a subsequent finance bill. This essentially removes the cap on lifetime savings, opening up the opportunity for further funding, even if the lifetime allowance has previously been fully used. The sting in the tail somewhat is that there will be a cap on the tax-free cash at 25% of the current lifetime allowance, which is a maximum of $268,275. For those of you with previous versions of the lifetime allowance protection, they might still be relevant for determining tax-free cash, and you should also be able to restart pension funding from after the 6th of April 2023 without losing your existing protection. If you're one of those clients that this impacts, we will ensure we discuss this with you in the next month or so. Also changing on the 6th of April is how much you can put into your pension each year. Currently it's 40,000 each, but it's going up to 60,000 each a year, provided that you have the earnings to support this level of contribution. There were also changes to what's called the money purchase annual allowance and the tapered annual allowance. Again, if these affect you as a client, we will discuss this with you in the new tax year. Some other topics covered were the government's energy price cap guarantee, which is staying at its current level of $2,500 until the end of June, which is an extension of 3 months, and they'll extend the 30 hours of free childcare per week to 1- and 2-year-olds as well. So those are the important points in summary. There's a couple of other things to cover this month, which I thought were important and maybe of interest to you. So the latest banking news at the time of me recording this, which is Monday the 20th of March, is that last week's the Silicon Valley Bank collapse and investors were bailed out by the US and UK government. And Credit Suisse has also been bought by another bank, UBS. Not many people you know were probably affected directly by either of these, but some tech companies and investors will have been affected by the SVB collapse, or at least have had some hairy, scary days. Thankfully, the central bank has stepped in to secure deposits. The headlines are pretty scary, change quickly and get us all nervous. In this new 24-hour news cycle, things move super fast. At the time I'm speaking, the Bank of England are confident that the UK banking system is sound and well capitalised. This is because there isn't the same system-wide problem that there was in the 2008 financial crisis, when banks around the world suddenly found they were exposed to rotten investments in the UK housing market. And since then, banks have been ordered to hold more capital and regulations around risks have been tightened. So most experts believe the impact of these current troubles will be contained. However, it does seem like a timely reminder for us all that there is a deposit protection for your savings up to $85,000 per person per institution, or $170,000 in a joint account. So if you have $85,000 in one bank and $85,000 in a separate licensed bank, then it's all safe if both went bust under the FSCS scheme. However, if you've got more than this limit, maybe it's just time to open another account with a different bank, and better to be safe than sorry. As a small note, there's also a temporary limit of 1 million for 6 months if you have suddenly had an influx of funds such as an inheritance or business sale. Finally, last week I attended a conference at which a lady called Deborah Coombe spoke about well-being, improved productivity and performance at work. As a business owner looking after the livelihoods of 7 other people and their families, the concept of well-being is often on my mind. Deborah shared a statistic that a massive 40% of people believe that burnout is an inevitable part of success. She spoke about how in modern life there is so much to think about, that the modern day worker now is taking on a lot more every day than any previous generations before us. The 24-hour news cycle, multiple instant messages, hybrid work, video calls, social media, alerts for headlines on your phone, the list goes on. Technology like this enables hybrid and more remote work, but it also fuels burnout. The reality is that the human system can't evolve quick enough, at least not quick enough to keep up with how things are moving around us. So she also spoke about how we can try to do it because some of us, we need to do it, but we need more time to do this, more wellness time to be able to manage our energy to continue to perform well. I mean, I really relate to this personally and for our team here. I can see how quickly things have changed in the last 7 years of running the business. So at Magenta, we'll take some time to review this, set some boundaries around instant messaging and emails, for example, and we'll work around better schedules and take some more breaks if possible. I mention this as I think it's relevant to everyone day to day. For most of us, the COVID-19 pandemic has been the most traumatic collective event of our lifetime. It's now 3 years since our first March 2020 lockdown. Life has forever been changed. These events and managing our emotional impact, the fallout, the rate of change to work, the change in social life and friendships and for our families, all take their toll on our energy levels and resilience. So as the weather changes and we have more daylight hours, maybe think about how you recharge and manage the constant distractions that this new world brings so that your mental health can have time to recover and bounce back full of energy. Thanks for listening, and if you need to talk about anything I've discussed, then let me know.